Thanks for joining us. My name is Ibrahim Sani, and of course, we're looking at the Singapore budget. This is because today, the Finance Minister of Singapore, Lawrence Wong, has unveiled his Valentine budget, 14th of February 2023. The budget, as was presented just now, showcases the ideas of rising costs of living, especially those in the more vulnerable and lower income group in Singapore. Singapore Prime Minister Lee Hsien Loong has hinted of additional incentives, and we can see that coming out from this budget, looking to encourage more Singaporeans to have children, and social support is to be expanded as well following this budget. Of course, joining us all the way from Singapore is Lee Ju Ye. She is the economist at Maybank Investment Banking Group. Lee, let's talk a little bit more about some of the ideas that was presented in the budget. We looked at the FY 2022 budget surplus in tax receipts jump, and this particular budget has also seen that kind of income coming in from there. What can you make from this?
Sure. So the jump in government's operating revenue in FY 2022 is reflecting the firm economic recovery as well as the recovery in the labour market. Growth has actually been quite resilient in 2022, rising by 3.6%, and that's thanks to the reopening tailwind. We have seen some of the sectors like accommodation, F&B services, retail benefiting from this reopening. And when we look at the operating revenue, the breakdown is really being driven by corporate income tax, which has already exceeded the government's target, and also personal income tax as well as GST collections. So this very healthy growth in revenue is showing that Singapore's economy has been quite resilient and actually surpassed the revenue expectations that the government had last year when they actually drafted this 2022 budget.
We're looking at this report that was presented by Maybank, written by Hak Bin as well as yourself, looking at the Valentine's present, the report was saying. And of course here you highlighted, with Hak Bin, highlighted the net investment returns is supported by MAS transfers to GIC. Looking at net investment returns contribution with the budget at $21.6 billion and the MAS transfer of about $238 billion in excess of reserves to GIC. This is of course for investment management likely supported returns, offsetting the possible income for weaker global outlook. What we're looking at, of course, is the way forward with Temasek and GIC. How do you think Singapore is going to chart itself out of this very turbulent 2023?
Sure. So net investment returns contribution, I think the government has been trying to make sure that the additional revenue that they get from that category is stable. So even though MAS in 2022 recorded a loss, they have actually still been able to contribute via the stat board contribution because the government passed a law to ensure that the contribution by MAS will be smooth across the average of the past 3 years. And going forward, I think we are seeing some turbulence in the equity market, and that may slightly affect the returns for GIC and Temasek. So, I mean, that's part of the reason why the government is more focused on ensuring that operating revenue is stable by working on some of the tax measures. Last year, they actually introduced some increase in taxes. So that would actually be the main source for the government's revenue rather than being dependent on this net investment returns contribution, which typically account for around 3% of GDP.
Okay, let's move to the central theme of the budget, not just in Singapore, but of course everywhere else across Southeast Asia. Addressing the cost of living concerns is the primary agenda for many governments, including that of Malaysia, for instance. And of course, Budget 2023 in Singapore is no different from that. It has helped on addressing some of the issues on rising inflation concerns. Businesses, of course, is facing rising costs as well, and support for unemployment workers is also there. We're looking at the GST assurance package being topped up to bring it to a total of $8 billion. Do you feel that this kind of support is needed? And of course, the second thing is, do you think that this is enough to address the cost of living or rising cost of living in Singapore?
Yeah. Sure. So this budget, again, because it's a Valentine's Day present for Singaporeans, and that has really, it was to address the rising cost of living for both households and businesses. The GST assurance package mainly targets the lower income households and the more vulnerable. So that actually helps to offset the hike in GST. In fact, the government did mention that all this cash rebates, the GST vouchers, the USAVE rebates, actually offsets almost 10 years of additional GST for the lower income households. But beyond that, I think the government has also implemented several measures to ensure that the lower income workers are taken care of. So if you look at the progressive wage model for Singapore, that has actually been expanded to cover several sectors. So last year, they expanded it to the retail sector. This year, they are going to expand it to the F&B services, the waste management sectors. So this would help raise the income of the lower income sectors. So this can actually help to offset the increase in GST hike for the low income households. For the businesses, the government is also going to extend some of these support measures. So similar to what we have seen last year, given the rising costs both for labor, utilities and rents, I think the government is going to help businesses, especially the SMEs, to help offset, to help support some of their cash flow needs. So we could see some measures like recovery grants for SMEs, temporary bridging loans, as well as a trade loan scheme for businesses to operate in 2023.
Let's look at the macro environment right now with the US blowout on jobs data, the disinflation in the US, as well as China's reopening, and of course inflation that is currently happening around the world and in Southeast Asia as well. What does all this mean for the Singapore's economy right now?
Sure. So what all this means for Singapore's economy, maybe I would break it down to 3 points. Firstly, on growth, I think we have seen a very resilient US labor market and China's reopening. Both of these factors are definitely positive for Singapore, given that it's a very small and open economy, very export-oriented. So we are actually looking at a half full rather than a half empty economy. We think there's going to be some divergence in the performance of sectors, definitely. Manufacturing, trade, water transport, those sectors may underperform this year because of the slowdown in global trade. But what would help Singapore's economy continue to chug along would really be the tourism as well as the consumer-oriented sectors. So accommodation, F&B services, retail, they will continue to benefit, especially with China's reopening as well, because China tourists account for around 1/5 of Singapore's tourist arrivals. Secondly, the strength in US jobs data means that the Fed is likely going to continue hiking. It's not done yet. We are looking for another 50 bips increase in the Fed rate. And that would translate to Singapore's domestic interest rate staying high. And that means lending rates, mortgage rates for Singapore are going to stay elevated. So that could actually continue to dampen the property market. We have seen property transactions kind of fall off in 2022 because of both the cooling measures as well as the high interest rates. Thirdly, it's really the inflation channel. I think China's reopening, while it is positive for growth, it also fends pressures for inflation because China is a major consumer of global oil. So that could push global oil prices up. And Singapore's inflation has been quite sticky. It's still well above the range that MAS is comfortable at. So we do think that inflation will stay high at around 6% for this year. And hence, MAS would have to tighten one more time in this upcoming meeting in April.
All right, well, we need to ask you a little bit more about the statement that you made just now regarding the US Fed hike. Surely we are at the end of the rate hike cycle, not just in the US, but around the world as well. Do you feel that the aggressive positioning of central banks is actually easing up? Or do you think that the further tightening of these central banks are still ongoing, considering that we're still having to battle a few issues, including that of inflation?
Yeah, I still think that the Fed is not done yet. Definitely, it's going to tighten at a much slower pace than what we saw in 2022 because it has kind of reverted. It is expected to revert back to just 25 bips for the upcoming meetings. So compared to the aggressive pace that we saw in 2022, this is going to be a slower hike. But I think some of the major central banks like ECB as well as BOE are not done yet with their tightening cycles. While inflation has peaked and are easing in those countries, it still remains way high compared to their pre-pandemic levels. And that's because food inflation is still elevated for some of the countries because of the global bottlenecks. And also services inflation in these countries are also very high because of the tight labor markets that we're seeing in this economy. So I think the latest job data from the US kind of confirms the fact that the Fed is not done hiking yet. So we do see a few more hikes to follow following the meeting in January.
Okay, we'll also need to ask you about the issues surrounding the possible recession that is currently happening or might happen in Singapore. I want to ask you, based on the data that has come out, where is the positioning that you think Maybank is holding right now when it comes to the probability of a recession? How deep or shallow, for that matter, that is going to take place in Singapore? And if so, for how long?
Sure. We have actually been highlighting that there are rising risks to recession, but that view has kind of changed following China's reopening. In fact, I think China's reopening is a major boost to a lot of the economies in ASEAN. So we do think that Singapore will likely be able to avoid a technical recession, which means a Q-on-Q decline for 2 consecutive quarters. We don't think that's going to happen this year. And mainly because a lot of these supporting factors from China reopenings, like Singapore's exports to China accounts for around 17% of Singapore's GDP. So that would definitely help to cushion some of the decline that we see in exports to ASEAN or the US and the EU. And hence we are pretty, as I mentioned earlier, it's going to be a half-full economy. We are looking at GDP growth at 1.7% this year. So that's slower than what we saw in the past 2 years, but it's still going to be some growth for Singapore rather than a recession.
Also, on top of this, do you feel that this situation is going to have a knock-on effect to other markets around the region?
Well, I mean, as I mentioned, China's reopening is actually a positive factor for other markets in this region. I mean, Thailand is the clear beneficiary of China's reopening. But countries like Indonesia and Malaysia will also see some benefits because they are commodity exporters, and China's reopening will actually help to raise demand for the commodities that are essential for some of these industrial activities. Oil, natural gas, coal, this will be positive for Indonesia and Malaysia. So overall, I think the countries in this region will be able to avoid a recession this year. But of course, given that the reopening story has actually been fading, and it's the tailwind has been fading in the past couple of months, so we will see growth pace slowing in this region for 2023.
Okay, back to Singapore. We saw the government raising the GST now, considering that inflation is sticky and cost of living is rising. Why the idea of raising GST now in this Valentine's Day budget?
Yeah, so I mean, the idea of raising GST has actually been repeated several times since 2018. Back then, Finance Minister Heng Swee Keat has been emphasizing that the reason that the government needs to raise GST is really because in the medium to long term, the government's expenditure is going to rise. Singapore is a rapidly aging population compared to the other countries in the region. So healthcare spending is definitely going to be increasing. And just to support this with some numbers, government spending is now around 18% of GDP. The government thinks that by 2030, it would be above 20% of GDP. And the current revenue of around 18% of GDP is not going to be able to cover that gap. So the government really needs to implement some of the tax hike measures in order to cover this gap in the medium and longer term. So that's really the justification for the government to raise GST hike even in this inflationary environment. But having said that, I also want to emphasize again that the government had also continued to support lower income households. So I mean, despite the rate hike in this inflationary environment, the low wage households will be well taken care of because of all this GST cash payouts as well as rebates.
And on top of this, the statement that was given earlier, we saw a lot of social safety nets as well and other incentives. Is this going to be the way forward from now on for the Singapore government to increase social nets even further and to provide more incentives to address that whole idea of aging society?
Yeah, so this more permanent safety nets, I think the government would be launching this year in order to provide some support to workers who may lose their jobs because of the slowing economy. Back during the pandemic, there was a cash support of around $700 per month for 3 months for those retrenched workers. The government could actually bring that back, but the government has emphasized that it's not going to be an unemployment benefit, but it's really more of a retraining benefit. So while they are unemployed, the government is going to support them to retrain and learn new skills in order for them to be able to find jobs. And that means that they would expand some of the schemes for training and upskilling. The government is going to provide subsidies for companies, and they could actually consider expanding some of the schemes to a wider range of technical courses. So the skills that the unemployed people pick up during the unemployed period would actually be useful for jobs which the government actually needs workers for. So yeah, I think going forward, the fact that the government is, I think the norm would actually be that the government is going to continue providing the subsidies or support packages for workers to retrain themselves for the new economy.
This budget presentation is also giving a little bit more focus towards Lawrence Wong. In April last year, Prime Minister Lee said that, quote-unquote, he will decide later when to hand power to, again, quote-unquote, heir apparent Lawrence Wong. Is this one of those times when we can actually see Lawrence rising to the action and perhaps trying to address some of the concerns by investors looking at these so-called power transition between Prime Minister Lee and Lawrence?
Yeah, I think it has been kind of well publicized that Lawrence Wong would be the next leader of the country. And I think the fact that he was given additional responsibilities after the COVID period to become finance minister and be in charge of the budgets, this is a clear sign that there is a leadership transition, and the People's Party have actually been voicing their support towards him. But eventually, most of the policies that are introduced are really not by one person per se, it's really by the party. So we do think that it's going to be a smooth transition. I mean, the next election is going to be held by November 2025. So there are still perhaps 1 or 2 budgets to go before the election. So this is also an opportunity for Finance Minister Lawrence Wong to actually step up to be ready for the next role that he has.
Would you consider this to be a risk factor of moderate degree when it comes to power transition, or it's one of those lesser risks? There are many other risks that we need to think about moving forward when it comes to the Singapore economy.
Oh, I think this would be low on my list of risks. I think previous transitions of power have been quite smooth, and the process has always been that the person in waiting is actually is allowed to go through this process of doing the finance minister role and introducing some of the policies for the medium and longer term. So I think the transition of power is very low in my list of risks for Singapore.
Okay, let's talk about other risks as well. We've touched on the issue of the US economy and, of course, the regional requirements here and China reopening. One thing that we haven't spoken of is, of course, the geopolitical tensions, not just between China and Taiwan, of course, but the ongoing conflict in Russia and Ukraine, and perhaps 1 or 2 other potential geopolitical risks that might take place around the world. Do you feel that this is a situation that Singapore is closely monitoring, and how does this impact Singapore, at least for this year?
Sure. So geopolitical risks are definitely a key factor that Singapore is watching out for. As I mentioned, given that it's a very small and open economy, so US-China tensions, China-Taiwan tensions definitely impose a downside risk. But having said that, I think that not just Singapore, but overall ASEAN could actually see some opportunities in the geopolitical tensions as well. I mean, back during the US-China trade war, we saw the China plus one story playing out because a lot of multinationals were actually relocating their production plants from China into ASEAN. So countries that benefited greatly back then were Vietnam, Malaysia, as well as Thailand and Indonesia to some extent. Singapore has also seen quite a big opportunity because while Singapore is a high-cost manufacturing area, we have actually seen fixed asset investments climb to a record high in 2022. The US-China tensions on the semiconductor front has actually resulted in some of the big US chip producers like Micron actually expanding their presence here in Singapore. So that has been a benefit for Singapore. And of course, the tensions in China and Hong Kong have actually allowed Singapore to see a lot of China capital inflows from China. So in a way, this has kind of benefited Singapore. Of course, we are not immune from any downside risks if the geopolitical tensions go out of hand. So definitely this is a key factor worth watching out for. But at the same time, I do want to highlight that there are opportunities that Singapore as well as ASEAN can get from this geopolitical tensions as well.
Okay, and of course, my final question to you is 2023 going to be a good year for Singapore?
Well, I'm in for 2023. We have seen better performance back in 2021 and 2022 when the economy was actually recovering from COVID, and we have seen a rebound in a lot of the activities. So 2023 is going to be a pretty slower year. So global growth is going to slow, and ultimately Singapore can't be immune to a global growth slowdown. So we would see some of the sectors underperform, like I mentioned, external-oriented sectors like manufacturing, finance, as well as trade. But at the same time, I do see some bright spots as well, because some of the sectors in the economy will continue to perform well. I think the tourism, air transport, F&B services will actually benefit from the continued recovery in tourism. And domestic sectors like retail trade is also going to stay resilient because the labor market has improved quite significantly and wages are rising. So that will actually help to offset high costs in Singapore. So in a way, I am still cautiously optimistic about Singapore's outlook in 2023.
All right, very good. General comments on some of the economies in Southeast Asia as well, perhaps on Malaysia. Do you feel that kind of optimism as well, or is there more reserved kind of outlook when it comes to other economies surrounding Singapore?
Sure. I mean, we think that the outlook for most of the countries here, including Malaysia, have definitely it definitely looks a bit more brighter with China's reopening. As I mentioned, because China is such an essential trading partner as well as a big investor into this ASEAN region. So our outlook for this region is actually less pessimistic than when we were doing our outlook piece for 2023 last year. And really the key factor is China's reopening. A lot of ASEAN's exports to China were declining in 2022, but we are probably going to see a reversal of that. And China accounts for around 20% of total visitor arrivals in this region as well. So given this reopening that we have seen, it is going to benefit the tourism sector as well. And that would ultimately translate to stronger labor markets, higher income growth for a lot of this region.
What's your view on the visitation of Malaysia's newly minted Prime Minister, Datuk Seri Anwar Ibrahim, with that of Prime Minister Lee, along with his delegation of ministers signing a bunch of MOUs? Is that a positive news for both countries?
Yeah, I think now that there is actually physical meetings between the country's leaders, I think that has actually led to a lot more agreements signed, not just between Prime Minister Anwar and PM Lee Hsien Loong, but also he has been on trips to several countries. So Indonesia has also benefited from some of the agreements that were made, especially as Malaysia agreed to invest in projects like Nusantara. So I think a regional cooperation would actually see a bit of progress after 3 years of COVID lockdowns and no visiting between the country's leaders. I think this year is going to be a step forward in terms of the negotiation and agreements and regional cooperation between the countries in the region.
Fantastic. Thank you very much for joining us. That was Lee Ju Ye of Maybank Investment Banking Group joining us from Singapore. Do stay with us because we have plenty of news when it comes to not just the Singapore budget, but Malaysia's upcoming budget on February 24th as well. You can find all these kind of resources on astroawani.com. Thanks very much for joining us. Stay on Astro Awani.